Hi everybody and welcome to August edition of the Australian Property Market Update brought to you by Creatopia Constructions. And my name is Mary, I'm your host and also the director of the company. So let's get started. We really will cover mainly the impact of the virus, one, on the economy, two, on the property market and therefore property values, and some ideas on options you can take as an investor, homeowner, or just generally an Australian citizen interested in what's happening. And just to quickly introduce myself and my company, we've been very privileged to help over 125 families over the last 7 years, have done over $12 million in projects and more. And also really why we're doing this webinar, this update, is because we're passionate about helping everyday Aussies stop mortgage stress, number one, and also embrace financial freedom through property. So we believe that with knowledge, that is power, and therefore helps you make a better, more informed decision about your own life and your own property journey. So that's why we're presenting this information, really. And here's just a legal disclaimer that please make sure you do your own research before you make any decisions about your own financial future, and the content in this presentation is general in nature only. So as we move really to look at what's happening from the economy, my first question to you all on this beautiful day is, are you okay? Especially if you're located in Victoria, especially Melbourne. It's currently been declared as a state of disaster since the 2nd of August. And most of metropolitan Melbourne plus the Mitchell Shire are in stage 4 lockdown, and now the rest of the state are in stage 3 lockdown. So I'm also located in Melbourne, so I'm definitely here with you guys. Before we even talk about any property or economy related topics, I think it's important to firstly address the mental health, the emotional and mental well-being of everybody, because we've been in this lockdown for longer than pretty much all the other states. And I think it's important to make sure that you have a support system around you. Therefore keeping yourself, not just physically healthy, but also mentally, emotionally healthy. So we can, generate more wealth through property and do all that good stuff. But that, to me, comes secondary to your personal health. That's definitely number one. So I hope you're doing okay as the first shout out. And if we actually look at this graph as to what's happening with COVID cases around Australia, unfortunately, the red line there you see is Victoria, and pretty much cases have just rose exponentially. This is cases per 100,000 residents. And that's been happening pretty much since the middle of June, since really restrictions have started to ease. New South Wales, has taken a slight increase in cases as well, and also Queensland, but all the other states are generally pretty steady. And interestingly, we'll see the correlation of the cases to the economy and therefore the property market a little bit later as well. But firstly, hope you guys are all doing well, healthy, and all the blessings to you and your families. So as we continue on, yay, let's have some good news, please. This is in terms of the economy. In terms of the unemployment rate, that is still steady at 7.3 to 4%. But if you have a look at these other lines, so the green line and the red line, which represent the underutilization rate and the underemployment rate, that is actually trending down. So that's fantastic. It shows that people who can be in the workforce, who can have a job, are jumping back into a job, right? So if they didn't have a job before, even the COVID situation, they're now jumping back into the economy. So fantastic. That means more people with more jobs equals more income for everybody and keeping the economy steady. So that's always a positive sign. So some bad news, it's actually July 2020, but the data is for June. So business confidence is still low even with support measures. So what that means if you have a look at the chart here, is there are two types of businesses. One is businesses operating under modified conditions. So essentially, if businesses have been impacted by COVID, they had to close, they had to reduce operations, they have to now work from home in some way, which is the majority of businesses. There are some businesses in the second category, which is operating as normal, which, or even better, for example, Woolworths or Coles have had massive increases in demand for retail food, right? So those are the two categories. And out of the businesses that have been impacted, pretty much a majority of that bar actually expect either a decrease in their revenue for the following month or no change. Only a very small percentage expect an increase in their revenue for the following month. Also, there's a percentage that don't know what's going to happen, which is fair enough. There's so out of the businesses that continue to operate as normal, clearly a smaller percentage that expect a reduced revenue, even though there is still a percentage over 10% there. But essentially, over 30% compared to the businesses under modified conditions, due to clearly the effect of the COVID restrictions, because some restrictions are not just due to physical distancing. For example, in Victoria right now, some businesses, once again, are forced to close because of stage 4 restrictions. That's not accounted in this questionnaire conducted by the ABS, but even without that stage 4 restriction, businesses are impacted. And this is actually for the whole country. If we now take out Victoria as a separate state, and if we target on what the impact of stage 4 and stage 3 restrictions are in Victoria, which we'll do the following month once we have more data flow in, it'll be very interesting to compare what the economy of Victoria does compared to the rest of the country. Clearly, probably not very good. But the interesting question is whether Victoria's economy will have a flow-on effect to the rest of Australia. And therefore, will the property market in Melbourne somewhat have an impact on the rest of the country? And we have some very interesting numbers as to property values in Melbourne coming up, so stay tuned definitely. And one of the other bad news that's come out this is from Westpac. So this graph reflects what's been happening with the credit issued. So they've really categorized credit as to two types. One is for the housing sector, so property really, and the second type is business. So we haven't taken into account private credit. So this is your credit card. So this is not in this chart. And we can see clearly a very low credit activity, lower activity for the housing sector ever since the COVID started. So if you have a look at the graph, it's pretty much every 5 years. That's the interval there. So if you have a look at since May 2020 to now, there's been relatively steady housing credit, but very low compared to previous years. So that's the red line you see. And the gray line is business credit. So it's making sense that businesses are having to take out more credit, more loans to keep their businesses in survival mode, just to keep their business afloat. So that is what's telling us on this chart. So property market is a mixed bag. So as I explained before, consumer sentiment is a huge factor to housing prices. And what we can see from the latest data in July is from the slight rebound in June, where we were like, great, easing of restrictions, people are feeling good, they're starting to spend money. In July, that's trended down a little bit. Once again, what is the factor that Victoria plays in all of this will be very interesting to know. But overall, I think the reality of the new normal for everybody, the new way to do business, the new way to live, is starting to really, impact everybody, and people are starting to face the reality of this new society that we all live in. And then let's have a look at what the impact is, therefore, on property prices. So if we go around the nation, the only two areas of green, which means the increase in property price, were in Canberra and Adelaide. Fantastic! Good for you guys. But unfortunately, national prices, as well as all the other capital cities, have taken a downturn, with the worst, not surprisingly, in Melbourne for July, which was the only city to be in lockdown. However, Sydney also took a relatively high hit at negative 0.9%, and Perth as well. So if you're in any of the other major cities, Hobart, you haven't been affected that badly, nor Brisbane. But overall, our national decrease was negative 0.6%. Once again, interesting to see what will happen next month whilst Melbourne's decrease, whether that will continue further, and then what will happen to the national prices. Okay, so as far as we can tell, let's have a look at the new listings on market. The first thing is increased new listings. So there's so many graphs, so we'll go through them one by one. The first one you see here on the graph is the new listings rolling 28-day count, which is the national numbers, and the orange line you see there is the 2020 figure. So actually, interestingly, now that consumer sentiment has been recovering for June and July, more people are putting their houses on the market, even compared to previous years. So the trend is not quite following prior years when listings are low for this time of the year, which is winter. To me, what I call is the frozen effect, right? It's cold, people don't want to be outside, people don't want to look at property. So usually it's a seasonal trend. But interestingly, COVID has actually encouraged more people to put new listings on. However, if you look at the second graph, which is total listings rolling 28-day count, national, the 2020 line is showing that the overall number of listings is still not huge, but it's consistent with the seasonal trend compared to previous years, but it's still slightly higher than this time of the year previously. So do people need to sell? I think that's the first question that may contribute to what you're seeing here. And then in terms of the market forecast, which is why this is these graphs are on this slide, whether the increased listings will make an impact on the demand and supply of property is what we're looking at. Well, the answer to that question is completed by the last graph, which is the volume of national sales. So this doesn't give you the value, but it just shows you how many houses are moving. And essentially, the mobility or the turnover of houses, so they're not sitting on the market, is actually a great indicator of how active the housing market is. So if we look at this trend, let's go pre-COVID, right? So pre-COVID, we usually get a slight downturn in December and January just because of the Christmas New Year effect. So that's pretty normal. But we have a look at February, before COVID really hit. The market, the volume was pretty healthy. So let's take that as our baseline. In March, once COVID started to really hit, that volume definitely got impacted, decreased. And then April being really the worst month when the whole country was in lockdown, the volume was at its lowest, as auctions can only be done virtually, open for inspections were limited. And as you can see from April, positive trend, May, June, July, it's actually been a steady increase of the volume of sales, right? So right now what we're seeing from a demand and supply perspective is from a demand, so the volume of sales can indicate a little bit of demand. Demand has been increasing, houses have been churning over more, and the number of listings or supply has also increased. So that indicates to me there's a slight recovery in housing demand. So once again, my personal opinion to all of those people that say housing is dead in the water, it's all gonna come crashing down. So far, our data does not show any crash, right? It shows actually, despite all the restrictions, people have done really well to adapt to the new way of looking at properties, inspection, virtual auctions, and therefore properties are still churning over. So I would urge you to always do your own research before you believe any news articles that the sky is falling, because it may not. Next one, a very interesting slide, is what's currently happening to all of the regulatory, so government support, as well as bank response, which is very important from a mortgage perspective. So the announcement from the last month presentation to now is that JobKeeper and JobSeeker will have a step down reduction after September, rather than just a all over stop. It's going to be a hard stop in September and good luck, which makes sense, right? Because there could be a riot on the streets if the government did that. So essentially, after September, the restrictions and rules for each of these supplements will actually be increased. So it'll be harder to get these subsidies. So JobKeeper does have a hard end date, which is the 28th of March 2021, and then essentially the government want to empower businesses to slowly start again, so they don't have to rely on the subsidy. And JobSeeker is being reduced. It's harder to stay on that now if you essentially are unemployed or needing employment. They don't have a hard end date as of yet. So the Prime Minister have just said we'll have more details on a hard end date later. But essentially the total amount of payments is decreased from September. And some positive news in terms of grants for building and renovations. Finally, after months, the home builder grants are active and online in each state. So you don't go through the federal government, you go through your own state government. They have their own application process that you go through in order to qualify, and then eventually hopefully you get the money in your bank. And if you're actually building a complete new build and you're a first homeowner, you could even get up to $45,000, more than the 25. So if that's something that applies to you, highly recommend you to start taking advantage of it now that you can, now that the state governments have signed on. And the one that will really impact on everybody, which is the banks, right? So if you have a mortgage on the property, banks have said they will extend what's so-called mortgage holidays with a lot tougher rules. So after September, similar to the government subsidies, banks are not going to say, right, it's end of September now, you have to restart paying your mortgage. What they're going to do is make you go through an income test. So do you actually have a practical plan similar to the government subsidies? One, to regain some sort of income so you can start paying your mortgage. For those people that don't have a solid plan, the banks are not going to give you a reprieve forever. So from that point onwards, it's up to yourself as a homeowner to decide, well, is it time to maybe sell my property, try to find another financial alternative, or if there's really no solid income plan, then there's really no incentive for banks to continue the mortgage holidays. And that's just the real reality of what's happening. So there you go. Finally, how will all of that impact you? So the most important question is, once again, what is your priority right now? So like the income plan we talked about before with the banks, even irrespective of whether you have a mortgage or not, do you have a good picture of what is your income right now? What are your cash flow streams in? What is your expenses out? And can you therefore take advantage of the government subsidies and your income to keep up your mortgage payments, as well as your bills, and make sure that you have a roof over your head, food on the table, so on and so forth? Or are you actually in a comfortable position and you think, great, I'm a property investor, this is a great time to invest? In that case, potentially, as the property market continues to trend down, this could be a great time to start looking at investing. And for those who are needing a little bit of a help in terms of managing your cash flow, we have some tips for you coming up right now. So this is a template. Once again, contact us for this template, or you can make this up on your own computer yourself, that I feel like is more practical out of the thousands of budget templates that are out there, and it's pretty simple, right? So you can do this on your computer or on a piece of paper, whichever is easiest to you, because some people like writing down stuff, and I'm definitely one of those people. So on a piece of paper, what I would do is write down 2 rows or 2 columns. One is income, one is expenses. So income is pretty simple, like, you know, your wages. If you have properties, maybe you have rental property, income from rental property. Interest dividends, here you can see from bank. Right now, interest rates are all-time low, so that could be not high, but who knows? Maybe you have a lot of savings. Or maybe also stocks, you know, what dividends from stocks. And any other income. For example, the government subsidies would also qualify as an income. And then you can divide this, as you can see here, January, February, you can divide it into different months. So I would recommend doing this on a monthly basis so you can see what's happening more regularly. If you want to do this on a weekly basis, even better, I say. But you know, you have to do it for 52 weeks out of a year. So it's going to be a longer spreadsheet there. So under expenses, you list everything you're spending your money on. And I love how on this template you have essentials and non-essentials, which is the way I recommend going. So under essentials are things that you can't do without. So for example, this person has rent. You may have a mortgage payment that you must pay. Second thing is food. Yes, it's an essential. Clothing. I would challenge whether that's essential, but look, if you need to maintain clothing for your job, for example, uniforms, then definitely. But if it's, once again, clothes you wear at home, is it really essential? If you already have clothes, that is. Car, of course, transport costs, or if you need to take the train to get to work, then of course that's essential. So total all of that up. And then there are non-essentials. And once again, this is where you can start to cut things out or reduce things if they fall under the category of non-essentials. Recreation will be things like going out, having a meal out, if you're in a state that can still have a meal, or going to the cinema, or, you know, doing something that, you know, spa, facial, golf course, whatever is your enjoyable hobby. Gifts to other people, to yourself. Long distance calls. I wonder how old this budget planner is. Yes, you may pay for long distance calls, or nowadays I would probably say more like gaming, or yeah, things like that, like little treats you buy yourself. They are non-essentials. And finally, love this template. They also have a section for charity and savings. So you may want to contribute to charities once you looked after yourself, and you know, obviously any extra this person has put towards a you know, piggy bank for their rainy day. And right now we are during a rainy day period, so you may need to tap into that. And finally, they also have a section called debt. So that could be other things you're servicing, which is like credit cards. But I will actually recommend putting credit cards under expenses, not under charity savings. So that's just a slight variation. And finally, at the bottom, at the end of every month, you have a look at what's your total income, total expenses, what's any cash that's short or extra. And maybe you can put the extra cash into savings, or maybe you can start building, you know, further investments into, you know, housing or stock market. That's up to you. But essentially, where I really wanted to challenge you, ask you for a task is under non-essentials. Are there things you can cut out? Are there things you can reduce? Essentials, they are what they are really, but can you cut the fat? I think that's the right question, especially in a time like this, even if you have plenty of savings, plenty of money, can you now redirect some of those non-essentials into possibly more investments right now? As we talked about, historically low mortgage rates, interest rates. So is this a good time to possibly invest? And also the share market has been up and down, but mostly down. Is this a good time to invest? That's all a question you might need to ask yourself. And hopefully that will help you determine what is your current cash flow, your liabilities versus assets. And out of all of that, then it gives you a better picture of what help do you have versus what help do you need. And really, sometimes if you are a little bit confused about what I just talked about and you need extra help, we highly recommend you talk to an expert. If you can build all of that yourself, fantastic. But really, because we're in Melbourne and we're really feeling the pain with you right now, we have a special offer. And yes, we are Aussies. We're all in this together. So Aussie, 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 oi, oi, oi. And the special offer for this month is a free consultation. Once again, the first 5 contacts only this month will get this offer because right now we do have an overwhelming number of people contacting us under the current circumstances with property questions. So as our service to you as a fellow Aussie company and as a fellow Aussie myself, if you do have any questions on how you can do your budget with the exercise we just did, or if you have questions, you're thinking, oh, I'm having issues with my mortgage, can you help? Or if you're thinking, how do I add value to my property? Any questions related to that, we're very happy to help. Just as a fellow Aussie, we're not going to charge you for it. But there is volume capacity just because I have a certain number of employees that work for me. So we want to be able to provide you with the best level of service, best quality of service, so I can only limit it to the first 5 contacts. Give us a call, 1-800-960-158 to take advantage of that offer. We'll answer the phone between 9 a.m. to 5 p.m. during business hours, Monday to Friday. Or if you want to contact us outside of business hours, email us at support@creatopia.com.au. And pretty much right now, the property market is at an interesting turning point as we experience further restrictions in Victoria and we continue to see the ripple effects of COVID on every other state. So I think, once again, when I do this presentation for September, we will really see the real impacts hit home. But I wish you and your family health and wellness, and we look forward to having you with us next month. Subscribe and like our page for even more updates, and have a fantastic rest of your week all. Stay safe, stay healthy.